Hi there, Holly Shields here for kalkinemedia. What is wealth? I know what you're going to say, but I promise there's more to it than that. Let's get into it. But first, sub to our channel and press the bell icon to stay ahead of the game. Wealth is defined as a valuable financial or physical asset that can be turned into a form that may be utilized for transactions. Wealth comprises things that individuals or firms or nations possess that may value or create value in the future. Owners can also use wealth to meet future expenses. What are the characteristics? Well, wealth must have the ability to fulfill needs and provide utility, thus making them desirable. Wealth, like every other resource, is characterized by scarcity. There are not free goods provided by nature like air and sunlight. Wealth in any form must be transferable, i.e., its ownership can be changed. Wealth must be definable in money value terms and thus must be quantifiable and measurable. So, what's included in wealth? Well, wealth includes properties, assets, or infrastructure that create value. These are called capital. Money too is a form of wealth. The storage of value function of money. Precious metals like gold are also wealth. Financial assets like equity and bonds also comprise the wealth of an entity. Even intangible assets may be held as wealth, for example, copyrights and patents. Buildings, vehicles, ornaments, real estate are all examples of wealth. But what is meant by wealth creation? Well, wealth creation is the process of investing in various asset types to meet critical future demands. Individuals can generate wealth in a variety of ways, and entities can generate alternative streams of income by investing in good assets. Any financial decision is said to generate wealth if the present value of future cash flows relevant to that decision exceeds the cost paid to carry out that activity. The present value of future cash flows minus the cost and investment equals the increase in wealth. In essence, it's a financial decision's net present value, or NPV. As a part of retirement plans, many times people try to secure income in the form of interest or dividends by investing in avenues like blue chip stocks, mutual funds, or government bonds. Wealth creation is essential for individuals' purposes like better quality of life, social status, future circumstances, debt repayments to fulfill needs, as well as goals, desires, and aspirations. Firms need to create wealth to gain the confidence of stakeholders like shareholders and creditors for a better market standing, for tapping expansion opportunities, and for resilience during bearish market conditions. Nations need wealth to support the economy from headwinds like inflationary pressure, health crises like the pandemic, unemployment, etc. At a global level, a country's wealth is seen as an indicator of its power and ability to influence decision-making on various international matters. What is wealth in an economic analysis? Well, in economics, wealth is a person's, household's, or a country's net worth. That is, the value of all the assets held minus the liabilities payable at a given moment in time. It's important to know that the terms of wealth and income are used in economics to differentiate between the two. A nation's gold reserves at the point in time are its wealth, while its national healthcare expenditure is a flow variable measured quarterly or annually or over a period of time. What is personal wealth? Well, personal wealth is the overall worth of a person's assets and belongings in the form of savings, investments, cash, or real estate, minus the debt. It's frequently computed to get a sense of a person's financial well-being, to assist them with financial management, or to assess the size of an inheritance. Personal wealth is often calculated by calculating three areas. First, liquid assets, which are defined as readily available money or anything that can be sold or redeemed for money fast. Second, the value of belongings, which are described as anything that cannot be rapidly swapped for money. And third, any outstanding debts. For example, let's say Mr. X has a mansion and a car worth $500,000 and $20,000 respectively. His savings account has a balance of $35,000. Added together, these assets are worth $555,000. However, he has a college debt of $10,000, credit card dues of $7,000, and a car loan of $13,000. Thus, the net worth of Mr. X is worth everything left over after clearing off the liabilities. The net worth will be $525,000. How about a nation's wealth? How is it estimated? Often the gross domestic product of a nation is deemed to be its wealth. However, that is not true because GDP is the income of a nation. Also, GDP is measured over a period of time and thus is flow variable, while wealth, as explained above, is a stock variable. To determine a country's wealth, the first thing we need to assess is its gross assets. Gross assets are like the sum of tangible and financial assets of the nation. Real estate, such as homes and businesses and automobiles, consumer durable goods, are examples of tangible or non-financial assets. On the other hand, financial assets include things like bank accounts, business stocks and bonds, and tax-deferred retirement funds, as well as corporate equities, mutual fund shares, pension fund reserves, and equity in non-corporate businesses. Nations, too, may borrow the finance asset purchases. Therefore, to assess the net worth, outstanding liabilities or debts like mortgages, credit card debt, auto loans, etc., one must be deducted from the gross assets. Thus, we can conclude that nation's net worth is the excess of its gross assets. Overall, its liabilities. Well, I hope you see wealth in a new light now. If you like this info, give us a like, comment, and a share on our video. Please sub to our channel, and while you're at it, press that bell icon. For regular updates and info, log on to our website at kalkinemedia.com. This has been Holly Shields for Kalkinemedia.